Friday, folks. How often is it that you get to buy a dip in the S&P to only watch it dip again and again after you burn through all that capital like I did? Oh, it hurts. But in the clarity of my transparency, as I do here, it's always funner to show you guys my accounts on these down days rather than the updates where my portfolio currently sits at 324, 25,000-ish dollars, trading down about $10,000 just from a week prior here. Unbelievable movements, and I know you guys want to talk about it. You want to see it, and you want some insights because there's a lot going on here that I feel like sharing that you guys will get value out of today. So hit that like button and let's kick it off by talking about the S&P, because this is the first time we've seen a 5% pullback in the S&P and God knows what, several months. The last big pullback I think we had was sometime in the summer when it was like a 2% pullback at most, and then the one before that was in toward the end of May and it was a 3 or 4% pullback. So I picked the dip up, and I always presume they're going to get gobbled up. But this might be the first real correction, the September slump here, baby. And I'm going to be buying if I can get some paychecks rolling through the door. So let's talk about paychecks. Let's talk about dividends. What's going on with the portfolio? Taking a look at the tax-free savings account, the path of least resistance for Canadians to get rich, in my opinion, holding up still pretty good. I'm sitting at 150K. This account has barely pulled back at all, waiting for some more dividends to come in before I decide reinvesting them only into some dividend stocks in here. I'm not buying any more index S&P in here, not yet anyways. But let's start at the top. Let's talk about the Canadian dividend stocks and what I've learned, because a while back I told you guys that some companies will actually pay you discounted stock prices to reinvest the dividend on a drip. And I've been testing that out with a company called Northland Power, which did pay me its dividend. And you know what? That dividend got reinvested. I'm about to tell you how much of a discount I got, because they offer about a 3 to 5% discount depending on the day. And my dividend, I usually get around $50. It reinvests about one share price, so I don't get the full reinvestment. It's not like an M1 finance account with fractional shares, but it bought me a share for the price of $40.41. And that was on September 21st. And we can see today that the market price of Northland Power is $39.80. So let's go back to the 21st and see how much of a discount, if that drip was actually worth it. So on the 21st of September, the stock price was $42.39. I paid $40.41, I think, or around there. So, or $40.49, whatever I said at the beginning. But damn. So you are getting real discounts for specific companies. And I know this is true for Northland Power and Bank of Nova Scotia. So that's just some little tidbit of advice for any new investors. This is something I've been playing around with. That's why you can see the only drips I have set up are on my Canadian bank here, my Bank of Nova Scotia, and my Northland Power. But when we're talking about companies that have been getting hit, I am down on Algonquin Power. I may reinvest some dividends into this guy here soon too, but I like where the banks trade at currently. I know they pulled back from their all-time highs. They're not giving me nearly the capital gains I was sitting on like even a month or two ago, but still, I would love to pick those companies up at these levels for anybody looking for dividend income. Now, on the bottom half of the portfolio, this is a little bit more not as great. I mean, we're seeing my VOO position I just picked up down 3%. My MPW position is down 4% and these are like the most recent buys. But again, not so bad. The only companies in this portfolio that I have on my mind, I'm done with VOO for now, but I'm really intrigued more into MPW or some more of my Canadian companies. But getting into the managed account, the non-tax advantaged, fully taxable brokerage account, guys, I've been collecting dividends from RioCan like there's no tomorrow here. I picked another bit of $85 up this month from that company. But in the beginning of 2022, you're going to see a lot of shifting going on because I use this as like a parking place account where I'm probably going to sell off my banks and put them within my TFSA, use that capital to contribute. But in this account, guys, maybe going into 2022, you'll see a little bit more action as from a new job I have giving me some employment income. I can actually put money in this account without getting taxed from a personal standpoint, because many of you know I've been operating most of my personal income at this point through a corporation, so it can't touch these specific accounts. But there's not much going on in here, guys, other than Facebook's pulled back a little bit, which we'll see I picked up in the corporate account. The only other company I'd love to buy in here is actually TELUS. This is one that I'd love to get into my TFSA, but that might take a little bit longer just because of me scaling other positions in there. I'm hoping it might take another 2 years actually before I can move TELUS, but I'd love to buy more TELUS. I love my Canadian stocks in here, guys. So that's for just the managed account. RSP, I did shift into VOO after selling Clorox, which I mentioned, and that's also destroying me here, about down 4%. But that volatility isn't bad. I know people down way hella more on so many other investments. Unless the VOO dips farther, that's not bad. A 4% dip, really not that bad. Pepsi's pulled back for me since I purchased. Johnson & Johnson's at a great price. I'd love to pick any of those up, and I could be a broken record week over week going on about this stuff to you guys. But let's talk about the corporate account. I updated you guys in this the other day when I just purchased Google. Luckily, the entire account this year is still sitting up 5.3%. That's $3,100 annualized since this account was incepted in May. So that's pretty good. It doesn't beat inflation because the inflation rate this year was at 4%. So, I mean, I really only made about 1.3%. Not that anybody really pays attention to that or factors it into their portfolio gains. But either way, I'm only holding up because of my tech stocks. We know this, guys. My Facebook, my Google, my Tesla. I'm down on Facebook since I purchased it yesterday. I purchased it at what, 27.15 or something, and now we're down to 26.77. So if you want to be buying Facebook, the dip keeps dipping there, and obviously more volatile than say the S&P. So yeah, I'm still going to be buying into some of these guys into the latter half of this year. I'm done with them, particularly for now. I might buy like the QQQ ETF or the QQQM because I just kind of like these pure play exposures. Maybe down the yard here going into 2023, I might buy or 2022. I'm already getting way too far ahead of myself. In 2022, I might try and purchase some Amazon positions in here, but I might just also do it through QQQM. And the only other thing for the rest of this year in particular I'll be buying is more Granite Real Estate Investment Trust. I really like this company next to Stag. I'm trying to get some more dividends to cover like the basic expenses, which I mentioned of this account. But other than that, guys, the account's not actually down that much. Things are pretty stable and level in here. If I can move myself down just to tell you, I mean, I'm down on both my Canadian positions by about 4%, but luckily they're a lot smaller weighted than the US side of the portfolio. And I know I'm not showing you guys my spreadsheet as per usual, but I figured this would just be a quick insight into how much I'm down. At least Tesla's still crushing it. That's helping a little bit. Not that that matters in the short term, right? But in light of all this, folks, this is kind of just where the account sits. I know I haven't got into like the crypto portfolio side of it. Crypto has been flat for me because it crashed way earlier on into the low 30s, and now it's kind of hovering between the 40 and 50 range. And I haven't been buying it as aggressively at all. I'm just waiting to see if it hiccups. If it hiccups, I might buy more of that as well. But I'm just sitting here. I'm just loving the burning and the fires, because this is when investors actually start making real returns on these dips. So I want to know what you guys think and what you're buying and how much are you down. I mean, I'm surprisingly not down too much, but yeah, it is what it is, right? So stay cool, stay awesome, and I'll catch you in the next one.